Welcome into a daily editorial here on the KE Report, chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. And Jordan, one thing that is maintaining itself in the gold market is this volatility. Day after day, we are seeing some pretty good size swings, and still it seems like, which is maybe a bit of a change for the gold market, that short-term weakness is really being bought. We had a weekday on Monday, but then Tuesday, yesterday, gold came flying back, and even today gold was up, but then all of a sudden has been giving back a lot of its gains. What do you think about this recent action where, again, volatility is in the market, weakness seems to be bought, but we're still not breaking out to even higher levels?
Well, in regards to volatility, Corey, if you look at the GVZ, which is like the VIX for gold, that has basically more than doubled over the last month. And typically, markets that trade in a range for a while or a number of years, as gold has done, volatility will really compress. And then when you get a breakout, the volatility explodes. And so that's what's happened. And after this breakout, we're seeing volatility increase, and we're seeing examples of it in both directions, as you noted. So I think we're going to continue to see higher volatility than we've seen in recent months and years, I could say. But we had the strong monthly and quarterly close last week. That was encouraging. And looking at fundamentals and Fed policy, assuming the Fed is going to cut rates 2 or 3 times this year, I think gold is going to continue to trend higher, and that is going to be supported by weakening economic data, and then at the same time, the dollar has cracked to some degree. So if the dollar continues to trend down, that's another something that provides, it backstops the breakout in gold, so to speak. And gold's been performing really well against a number of foreign currencies. And when I look at gold against foreign currencies, I look at that, the basket that I look at, which is another way of looking at it is gold times the US dollar. That at one point today, I mean, I haven't looked at the numbers since last night, but last night it was within 3% of an all-time high. So everything looks bullish for gold. And I think we'll probably continue to see this kind of volatility higher than what we've seen in the last couple of years. But we will get a pullback at some point. But overall, I think for the balance of the year, you have to stay bullish on gold, and the surprises are going to be to the upside.
So, Jordan, any importance that you're putting on this level that gold just recently, at least short-term wise, topped out at right around 1430, 1440? If you take a look at a daily chart, kind of looks like a double top forming potentially.
No, that's a good point about the double top, because looking at the daily candle chart, I was looking at that, and it kind of, I thought to myself, that looks like a double top. Even if it is a double top and gold corrects for a week or two or longer, I wouldn't be that concerned. I mean, looking at the hourly chart, if you look at the hourly chart, you can see that there's basically the key resistance is at 1440, and it hit 1440 on June 25th, and it came back down to, I want to say about 1385, not quite 1380. So we're kind of in a consolidation right there, and that's almost 60 points. And so if gold were to break above 1440, a measured upside target is going to get you very close to 1500. But on the daily side, Corey, 1420 is the key level. And so it looks like we were not able to close above that. So 1420 is going to be the key daily resistance moving forward. And I'm in any case, I'm really not that concerned, Corey, because when you think about the fundamentals of the market, as I just discussed, and the fact that the Fed is going to cut rates multiple times, I mean, assuming they do that, it's just more likely than not that gold is going to continue to move higher, and this breakout is going to continue to run. So, whether we're on the cusp of a snapback to 1370 now, or if that, if we get a pullback later on after hitting 1500, It's just not a big deal to me either way.
Okay. Yeah, so still overall though kind of a bullish playbook that you're reading off of though, hey? Simply because this recent action has been encouraging and even this little bit of a maybe sideways consolidation also encouraging to start off this half of the year.
Yes, I mean, we've noted a lot of things here in the past, and they're all pretty encouraging for gold. I mean, the only worry would be, before I get to that, another positive, Corey, is the miners, the stocks. I mean, they're holding up really well. I mean, they even got into their gaps a couple days ago when we had that sell off on Monday, but then on Tuesday they just exploded. I mean, they didn't continue lower to finish filling the gaps. They just exploded higher on Tuesday, and even today, decent action, I would say. So the stocks are acting really well as far as breadth. The percentage that have closed above the 200-day moving average. I checked yesterday, and the Huey was at about 90%. GDXJ was at about 87%. So, most of the sectors basically in an uptrend if you define it by the 200-day moving average. So all that's positive. I mean, the only negative, and you'll see people talking about this, is gold got too overbought too quickly. Sentiment is too bullish, and those are facts. However, when the market breaks out, it breaks out after trading in a range for a number of years. You're going to see momentum readings, sentiment readings approaching extremes. But when you're evaluating those extremes, Corey, what happens is people immediately just evaluate them over the last couple years. I mean, sure, if you look at gold compared to the last 2 years, the RSI, these momentum indicators, are going to be very extreme. And, same thing with the COT and various sentiment surveys. However, if you were to look back at, the last 20 years, you'd see that some of these are similar readings to what happened in the years when gold had major breakouts, like 2009, 2005, 2007. So the character of the market has changed, and that's why we have to be careful to assume that we're going to have some big downturn because momentum got too overbought and there's too many specs in the market now. As far as the COT, based on what I look at, it has not reached a real extreme yet. So I'm not that concerned about the market getting too bullish or too overbought. However, looking at the chart, Corey, over the since the end of May or the last half of May, gold has had a pretty sharp move. So, it wouldn't be a bad thing if gold corrected here and came back and, retested 1370 or 1380 again. That would not worry me that much.
So following up on one thing you just said there, but maybe a little bit more clarification, do you consider this recent move by gold into the 1400s as a major or crucial breakout?
It's too early to say because it really depends on what happens on the monthly and quarterly charts. But actually, I would say that not yet, because if you go back to after gold crashed at the beginning of 2013, its next two rallies, I believe on the daily chart, it got up to about 1420 and it came back down. So it was unable to close above 1420. Now, what's happened in the last 10 days or so, Corey? Gold has not been able to close above 1420. So that's really the key. That's the key resistance we're looking at, and this is on the daily chart. So, but I mean, as far as a major breakout, I mean, breaking above the 1370 level, that was a major breakout. We already have it on the weekly, quarterly, monthly charts. Now the second step is closing above 1420 on a daily basis, because if and when gold is able to close above 1420, it has very, very limited resistance until the low 1500s. So in my opinion, gold's already had its major breakout. This is just another small step where if this happens like in the next week or so, gold it still has a lot of upside momentum, and then it could really fly to 1500. However, maybe it's going to take a couple weeks, a couple weeks of consolidating, trading sideways here, building up some energy, for that type of move to happen. So I hope that clarifies.
Yeah, I think it does. But you know what? I guess the jury is still kind of out, but at least the jury is leaning on the more bullish slot side of things. And you mentioned how the stocks are holding out. The stocks still haven't really broken out in the same sense that gold has. Are you expecting that to happen in the stocks, or is it more just stocks continuing to almost consolidate at least some of these recent gains they've put in?
Well, I mean, I think the stocks are acting fine in my opinion because if you look at whether you want to look at the Huey, GDX, or GDXJ, if you look at those against the price of gold, they've made very strong. I mean, the ratios. There's been quite a bit of relative strength since the end of May, so that's very encouraging. I mean, the fact that GDX or GDXJ they're not at 6-year highs like gold is, that doesn't concern me. I mean, they lag, and then when gold breaks out and confirms a bull move, that's when you see miners really really trend higher aggressively. And that to me, that could happen. Same thing with silver. Silver could start to outperform after gold closes above 1420 on a daily basis. But yeah, circling back to the miners, they're acting fine to me. I'm not worried that they're not at their all-time highs yet. They're not at a 6-year high yet. I'm just not worried about that. I mean, Corey, go back to what happened in 2008. I mean, the miners were lagging so that terribly, and then gold. We had this great rebound in precious metals, this great move in gold, and what happened? I mean, the miners in silver, which were really lagging in 2008 badly, after we got that low in October 2008, they were flying. I mean, they had spectacular moves. So look, if gold closes above 1420, all these bullish things continue. It's going to trend higher over the next 6 to 12 months. The miners are going to follow. Silver is going to follow. So I'm not concerned about any long-term divergences here.
What about one final comment to just how the U.S. markets are reacting? U.S. markets are heading higher, looking at all-time highs. This is also in the face of, yes, this more bullish outlook for gold. So how are you balancing that scenario?
Very good question, because I think that I'm looking at the gold against the S&P ratio, and it's kind of it's not that great action over the last couple weeks or so. However, if you look at gold stocks against the S&P, potentially better action there. What it really comes down to, Corey, is if you look at gold to the S&P 500, there is resistance at around 0.54. If that ratio is able to surpass that high, that means gold is probably going to go back to 1900, within the next, 18 to 24 months, call it. However, if that ratio is unable to surpass that resistance at 0.54, then the best we could probably hope for this move in gold, I think, would probably be 1600 or 1700. So we'll just have to wait and see. One thing I will say is that we obviously want to see precious metals outperforming the stock market. However, if gold is not outperforming the stock market, but the miners have momentum and the stock market is doing well as it is now, that's going to be better for the gold stocks and silver, but not necessarily gold. So I know there's some nuance there to that relationship, and it's great that you asked the question, Corey, because that is going to tell us, is this just going to be a sharp 6 to 12 month move, or are we really starting a new multi-year bull market in precious metals? I'm not sure the answer yet, but that gold against the stock market ratio, that is going to give us the answer at some point. So right now, that's what cautions me from being too bullish and saying, this is a new multi-year bull market. Gold's going to go to 2000. That's not going to happen unless gold surpasses that resistance in the gold to the S&P ratio. So I know there's a lot of nuance there to that relationship, but as I see it, the strength of the stock market, that's a concern if we're 12 months away, that sort of time frame. However, the momentum that we have now, I think it's going to continue even if the stock market continues to trend higher. But at some point, this run in precious metals is not going to be sustainable without outperforming the stock market.
Okay. Well, Jordan, I appreciate that update. And yeah, there are a lot of nuances going on within this gold market and a lot of other markets that you do need to consider. But hey, it finally is encouraging that gold does have strong sentiment, got to overbought levels, and is holding this recent breakout level. Just interesting to see U.S. equities continuing to move higher and even bonds continuing to move higher. There's a lot of money in that financial system. Jordan, thanks for your time today. Have a great 4th of July. I look forward to chatting with you next week. And everyone, click that link below and go visit Jordan's site to follow along with some of his other commentary.